Hi everyone, this is Paul Lang from DTS, and I want to introduce you to what you're about to watch. It's an hour-long event that was presented live to free members at Discipline Trading Strategies. It's called Chart Lessons. This is something I do every once in a while, and I'm going to discuss a few key points about technical analysis, some very specific things showing you how wonderful it works and how well you can use it. Naturally, people that benefit from this are ones that have a good education in technical analysis. If you're new though, it would be very entertaining and fun to watch is what you can do with some of the charts and some of the things you can do if you know the language of charts. If you enjoy this event, check out the many other educational events, articles, and Trade of the Week videos you can get access to at the free stuff page at Discipline Trading Strategy. So for now, sit back and enjoy. Good afternoon. It is 5 o'clock on the east coast of Florida and in many other places in a north-south line with the east coast of Florida, New York, etc. Hi everyone. And as usual, we'll get right to it. This is the DTS educational event. Kind of the schedule I've been on for a while now, a couple of years, is to have the educational event the first Wednesday of the month. Unless the first Wednesday is on the first or second like it was this month. So this is kind of the first Wednesday of the month. Hey, let me throw something out there because I just saw somebody that, someone who will remain nameless, made a comment in the trading room. And I didn't have time. I was going to pull up something. I just want to show this to you because it's such, to me, you know, if I had just a handful of 4 fingers and a thumb, which I do, and I had to devote one of those fingers to like the most common problems that stop people. Let me just show you a slide for fun because I'm doing this because this is really for everybody so much. You hear me talk all the time about patience. This is a summary slide from the end of one of the courses. Most common mistakes, number 1, blah, 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 blah. Number 2, over trading. And number 3, over trading. Yes, as mentioned twice in a row, the ability to make a former week's salary in several minutes brings about emotions of greed and then fear that has you trading patterns that you do not have the odds in your favor. Just want to throw that out there. There's nothing in today's course, just happened to be something that was brought up in the last couple hours from the trading room and thought I would throw that out there. It's just a big deal. I mean, it just is. And this is one of those things that, you know, there's several steps to being a trader. And the first one that I always advertise and insist on is you have to know what you're doing, which is the stumbling block for so many people because they really don't. But even after that, there are some challenges, some psychological challenges, and one of the top psychological ones for a lot of people is just not over trading, just understanding, you know, to make your money from the top quality trades that you can find, whatever that is, for that particular month, long term, for that particular day as a day trader, whatever it is. So let's get going because I'm now officially 1 minute and 30 seconds behind schedule. Chart lessons tonight. There's a big theme running through tonight. I ought to quiz you on it later and see if you can figure out what it is. Educational event Wednesday, July 9th. Everything is right on that slide. That's quite a good start. It's been a while since I've done chart lessons, blah, blah, blah. Nothing good there. Nothing good there. You got that in your email. We don't need to review that. Just a few technical concepts, maybe just showing off how great technical analysis is. This is not necessarily trades, rather concepts. A couple of these are trades, but the point tonight is to show some concepts. And a couple of the concepts are things I don't do, so I didn't have trades for them. I just want to show you these concepts. So they're things that, you know, I utilize in my trading, but I don't have trades for them. Not everything's trades. This is just showing you some examples, chart examples. That's why it says chart lessons. It doesn't say 5 great trades from the last month or whatever it is. If you want to understand how events like this tie into your trading education, be sure to be here for the last slide. It's not a hook to keep you here to the end. I really don't care how long you stay. But the last slide, I have to go through the presentation first. And then the last slide, I think is a really important slide for anybody who is learning, thinking of learning, has learned, but struggling, whatever it is. Paul, I write notes to myself. Do you like that? Paul, discuss the question of the week down. Oh yeah, of the week gap down recently, if you feel like it. Okay, I feel like it real quick. Because this is, at first I wasn't going to, but then I realized it's really kind of the theme for tonight a little bit. I sent out a question of the week, not this week, but I think it was the last week. It said something about, you know, stock gaps down, or maybe we were doing it in a recent event, whatever it was. And the point of it was that a stock had gapped down wherever. And the question was, you know, if you break above, you know, the highs that day, is there resistance here? Because people talk about a tradable void. And I went on to explain that this is a huge resistance area, okay? Now, here's a big distinction. I was simply stating a fact about one of the many things we looked at in a chart. There is huge resistance here. It's a big misunderstanding. People call this a tradable void. I don't know what that means. There's huge, now, but somebody came back and pressed against me and said, oh, but sometimes gap downs work long. And yes, of course they do. I did not say that this could never be a long, right? It wasn't about a trade, it was about a technical fact. When you add up any trade, when you look at any chart, it's always about reading the whole chart, the language of charts, and there's several things you look at. One of the things you have to consider if you're going long is what is the resistance factor. All I pointed out was when you're doing your analysis, there's huge resistance. Now there can be other things on the chart that maybe reverse, that are more powerful than the resistance there, and it can be a long. That happens, okay? Didn't say you can't go long. I just said that there's this myth that there's no resistance is because there's nothing to the left, and nothing could be more false, and I proved that to you. So just to be clear, and the reason I decided to go into a little detail here about a prior discussion was because that concept applies tonight to a large degree, and I'll explain why in a little bit. So let's go on to what I think is going to be the first slide. Yeah. I'm going to start with a quick little, not a quiz, let's just call it a discussion, but I did give you 4 choices here about this particular chart off to the right. Take a look at the chart real quick, and you can see there's a silver line that somebody drew there. It was probably me. And here's the choices here. We're looking at this last bar right there, and we're looking at it as it broke that silver line, and that silver line, of course, is supposed to be representing these past 2 prior lows. Fancy term, we call them pivot lows. You may call them just prior lows, inflection points, V-bottoms, whatever you want to call them. And we went under that on the, so here's the question for you. A, this stock is a short at 1 when it broke prior lows. Number 2, this stock is a short on confirmation when it opens below that bar at 2. 3, the stock is a long at open at 2. And 4, the stock is never, that's a hard word to always use, never a short in the near future and could be a long. If you want to give an answer, that's fine. I'm not here to make you, in seminars, in the seminar program, I make people answer, but in here, I don't care. Anybody want to offer an answer or any comments about that chart right there? What do you think of it? Just a stupid chart, long, short, confirmation, no confirmation, what do you do? We have a vote. All the people here, we have 1 vote. That represents 2% of the entire crowd. Thanks for the vote, Carlo. Carlo says D. Are you going to let him get away with that one? That D has the word never in it. That's a hard word to prove, isn't it? Give me a couple more answers just for fun. Okay, you got backup in D. I'll take that. You got some backup. B? Okay. There is an answer to this one. The confirm short? Okay. There is a definite answer on this one. And when I give answers, I oftentimes like to kind of state how purely objective it is, like you're just wrong if you didn't say my answer, and how much there's maybe some subjectivity. I got to say, this is, 95, 99% objectively. The answer is D. This is never a short, never on this time frame in the near future, never. Now, remember in technical analysis, it doesn't mean that you couldn't go find a chart where that pattern worked and it dropped enough to make money. But it's very low odds, and simply because it's a big, wide area, and when you're coming from the top and you hit the bottom, and then you go under the bottom a little bit, that just is very low odds to work, and you have also issues of your stops and targets and all those other good things on this time frame. I'm not saying there's other things you couldn't do. I actually call this the second biggest mistake traders make, which is to short what they consider to be a break of support just because it goes a little bit under a prior area. Now, it's not that it'll never drop, but actually this is what I prefer to see to go long. Now, it doesn't mean you just go long, but it means if you get some kind of confirmation to go long, this is even better than if it didn't break, I'm using air quotes, but you can't see that, break that support level. I'll explain why in a minute. But what I want to point out here on this particular one is that this is not just me picking on some chart and finding a chart and going, oh, I'll show these guys. Here's this weird chart I found. Let's just show everybody what it is. This is a trade I did. This should look somewhat familiar to you because this is actually the trade of the week I put in. It's a long-term position. See this weekly, this right here? All this right in here? That's the weekly chart right there. Do you see it? Now, that red bar represents the opening half hour that day. See right here? That's the opening half hour of this day. It ended up turning green. I didn't want to give you any hints and show you the green bar. So this ended up being entered then as a long-term position on the weekly chart. Now again, the weekly wasn't the entry, but this is kind of your confirmation that you look for right there. Boom. When all this happens together, becomes a very high odds thing. This is what I look for. I'll come back and explain that a little bit. And then here, if you look in this green bar somewhere in here, that becomes the daily chart here. And then I got it on the pullback. And actually, I was probably a whole day late on the pullback. And then this is in the long-term trader, and this is an 11-hour trade to target 1. Now, only 1/3 was taken, so it's not all closed. But there was an 11-hour trade to target 1. That's how I like doing long-term. So point being, that's just not some weird slide. That's exactly what I look for and why I wanted to bring that point up, and why sometimes it's so often tough for traders, because for a lot of people, they look at that as a break of support and either a short or something you would never go long. Yet that was on my radar to hopefully do just that. And it's not to say I'll never do something different, but that is the highest odds thing. And then to kind of put the two charts together, I just put these, this is the weekly chart and this is the daily chart. Now, well, Scott, if you want to email me, I don't want to go into too much detail because it's kind of not the point of tonight, but and actually I'm going to explain it a little bit to psychology on the weekly chart of why it's such a great thing. But what it eventually amounts to is a failure. It's a breakdown failure, and when you see proof of the failure, that's what makes it so much better. I'm going to go into that a little bit more after I look at a couple more slides. But you look at these two charts together, I just consider this, I put in my notes here, a thing of beauty. Now, not a lot of people would look at this and call this a thing of beauty. I think this isn't exactly a thing of beauty, and this becomes one of the highest odds things because you have proof. I always kind of joke when I'm teaching the seminars that we're always asking the question, well, this part isn't the joke, we're always asking the question, who wants to go long, who wants to go short, who has to go long, who has to go short? And sometimes we ask the question, which is, okay, are there still bears here? And sometimes the question gets answered for us, and that's what you want to see. The question was answered. Where are the bears? Go back to this slide. Where are the bears? You open the door expecting thousands of bears to come out, and 3 bears come walking out, and they got a drink in their hand, they got a beer in their hand, probably a Hamm's beer. A similar concept right here. Here is a chart that broke the prior support level. Now, to me, this is the best thing. Another low, but this was most special. This one you could enter much more aggressively, and you could enter this much more aggressively because this was special, because this isn't even really support in here. This is the support level. So this one here, now this is not a trade, this is just a chart that I had on my screen for other reasons. I never took a trade on this. This is a daily chart. But this one here, you could be much more aggressive entering. I mean, you could enter in that bar if you wanted to because there's a big support level there. And there's nothing better than, air quote, breaking support and falling into real support because most people don't see it that way. Can you show us how show you how there's no bears? We just broke what some people would consider to be a huge support area, right? That's when all the bears should come out, right? Time to short, we just broke support, and look what they did. They drove the stock down half a day, and then the bulls snapped it back. For the fact that the bulls, not just a green bar, but the fact that the bulls won the next battles indicates the bears had nobody there. That's all. This is not to say, I want so much to do my summary comment now, but it's way out of place. This is not to say that I would never necessarily take a higher low, but there's a problem with higher lows. Now, if you ask somebody to compare a higher low, and I'm saying like right here, this is a higher low, right? Higher series of lows. Here, so we're going along. Here's some lows, and the common wisdom is, well, okay, this is being bought more aggressively and is bullish. Well, again, a big thing of tonight is you can't look at any part of any chart in a vacuum and just say, oh, here's the rule, right? Oh, it's a higher low, therefore time to go long. No, that's not how it works. There's reasons things happen, and you have to understand why things happen on a chart, language of charts. So again, here we have, this is not a good setup to me, and even though we had higher lows, and somebody may argue, oh, the bulls are stepping up, they're getting more aggressive, look at that, but it's just a total failure. So higher lows are not necessarily a sign of bullishness. Now, that's not to say I will never take a higher low, because sometimes a higher low is just that, if the rest of the chart agrees with that. Another example of a higher low, and this one here maybe could have been, and these are all just in the last few days. I mean, this isn't from 1987, this is in the last few days. And this one here probably could have been predicted a little bit because this one here, It had actually started an uptrend, like the slide says, and then it kind of coughs right away. It comes almost back to the prior low. So we're in one of these barely higher low situations. But the point is being, it's not that simple. And now the reason that I so much like and would prefer to have a lower low made is for the reason that I just said. When you come and you make that lower low, you're asking the question, okay, bears, when you're here at a higher low, we don't know. Here's the question for you. When you're right here, do we know if there's still bears on the chart, and if there are, how they're going to react if we challenge this low? And the answer is we really don't know, right? That the bulls decided to get aggressive. We don't know if the bears are kind of sleeping. Remember, there's two ways prices move up. And one way is because the bears are beating the bulls, and the other way is because, they move up because the bulls are beating the bears. But the other way they move up is because the bears are just pulling back. They're just saying, hey, remember, we always talk about bears driving prices lower, right? That's what you always hear, which is what they do. But do bears want to drive prices lower? Everybody? If you're selling, do you want to sell at a lower price? Do bears want to drive things lower? Why is it that bears drive things lower? There's one word. It's a 4-syllable word. Starts with a C. If you are long and you are going to sell your stock, right? The only reason that you end up selling it lower than you wanted to is because of competition. In other words, everyone else is selling too, right? So there's times that all the bears are selling and you're forced to chase down a lower price. And there's times where the bears have gotten prices so low that they say, hey, we don't want to sell anymore down here, and they allow the bulls to bring things higher. And this is the test you always have to see. So when you have this, you're just not sure what's going to happen. But when you have this, you've already answered the question. The bears are no longer interested in selling at this low level. They love prices up here, right? Somebody's long, they want to get profit, they sell it at 16.50, they're happy. Some other people sell at 16, 15.50, 15, 14.50. Then when you get down below 14 and somebody goes, you know what? It was at 16 last week. I'm not going to sell at 14. That's crazy. So they're no longer selling. And how do you see that? You see that because as prices went lower, as we broke this area, the people long are worried about things falling more, and yet the prices rally back. Okay, enough on that one. The power trend, a question that may come up in this section here. Before we get into this section, just a quick comment, a quick question that I will answer more later. Can you short an uptrend? Or maybe the correct way to phrase is, should you short an uptrend? Should you ever short an uptrend? Yay or nay? What do you think? Jack, the ones that are short, yes, they want prices to drop, but they're not pushing it lower themselves. They're just sitting there waiting for it to drop more. You can under the right conditions, okay? Well, I don't know. I was reading the internet, Eric, just last night, and it said that you never short an uptrend. Never. Yeah, depends on the context, okay. Well, I'm talking about on that time frame. And, one answer is, yeah, when it goes climactic, okay, we kind of know that even if you're kind of new. Well, let's take a look at this and dive into this topic a little bit more. Here is what I call a power trend. Maybe everybody calls it this. I don't know. I don't know if I made up the term or where it came from. I'm not sure. But here's a power trend. And I'm looking at this right here. And the issue is, wow, is that ever a tight pattern, right? Why is it that that happens? Why is it that that pattern gets to be so tight? What is happening behind the scenes, so to speak? Banks. Well, we don't know if they're banks, but you mean big money, right, Norman? Big money. Program trading? No, program trading wouldn't do that. Well, no, program trading wouldn't do that. Every time bears sold, bears bought. But who are the bulls that are buying? Yeah, big money. No, yeah, banks, accumulation of my funds, whatever. But actually, the first person answered this and gave the answer away, kind of. But it's not just big money. It's not one big money. It's more than one big money. In other words, there's competition. There's at least two big monies buying. And that's why the price is never allowed to drop. It just continuously keeps clicking up a little bit at a time. As opposed to when you have a pattern like this. What made this stock go up? What made this stock go up? Well, that's a good question. What made this stock go up? It's probably a C, and F answer to that. What made this stock go up? What made that stock go up? See a lot of people typing, just waiting for the answer here. No, it wouldn't be news. News would more likely be a spike of some kind. I mean, it could be, whatever reason somebody wants to buy it, but exhaustion of bears. No, the bears are still there. They're selling all over the place. Yeah. The answer is still big money, right? I mean, Jag, you, Carlo, and I, we can't make this stock go up like this, right? It's still big money, but here's the difference. It's one big money. It's one big money, one person. I say one, it may not literally be one, but now there's no competition. So what happens is when there's a big buyer and they're allowed to control things, right? Stock opens, they buy a bunch of shares, right? They pound the table. Look at the volume. They pound the table getting shares. Then what do? Well, prices gets up to it. Their goal if they're buying for a client is to get the stock as cheap as possible. If they have to buy 10 million shares, they can't turn the stock over when the order came in at 37. They can't turn the stock over an average price of 40 and expect to keep their job. So they have to buy it as cheap as possible. So they pound the stock, get some shares, and then what do? They take a nap. And then all the other little traders like you and I, they play with themselves and blah, blah, blah. There's no big money and it collapses. And everybody goes out and goes, oh, well, that stunk, right? And then what does it do? Oh, then the big money wakes up and says, oh, guess what? Bam. Okay, got to get some more. Bam, 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 bam. And then they peel off. They back off again. Now, maybe there's a second bigger money player. Maybe a lot of little people are adding up and making do this. But again, with big money there, you get these big dips that come in. And then when you get these dips, big money decides at some point, hey, that's the best I'm going to do. And that's how you get that pattern like that. Okay, so that power trend is a nice, reliable thing, but the problem is getting into it. It's just kind of tough to jump into one of those. I do like those when you find them. You don't see them a whole lot that perfect like that. I have a couple in here to show you. And this is much easier because, in a sense, the stock goes on sale every once in a while, and you get to get in at a cheaper price. So this was the second trade I've made here. This actually was the trade. This is Rocket Labs from Monday. It was a nice chart. It had a pattern heading higher, and wasn't involved. The gap up was way too much for me to mess with, but just starting on that pullback there and then doing a second trade on it. So that turns out to be a nice trade, a pattern that is strong, big money buying it, but yet they're not fighting over it to the point where the stock has just taken off like that. But here's the real point of all this. Well, here's another one. Here's another power trend thing. But all that stuff I just told you about one buyer, two buyers, does any of that make you money? Does any of that make you money? The words I told you? I mean, knowing why it did that? No, doesn't make you anything. Not knowing the reason why. That's just water cooler talk. Here's what you have to know as a trader. This pattern. That's what you have to know. And I don't really care if you know why it's going up or if you think mice are doing that or if you think, it just doesn't matter. It doesn't matter. That's the whole point is in understanding charts is you just need to understand the chart, the patterns, and what happens. It doesn't matter why that's happening. It's just nice to know stuff. So what I could tell you is, and the thing about a power trend is when the big money backs off or the competition ends, here's the thing about a power trend is very, very reliable. When a power trend ends, you're going to have a heck of a pullback. So here's how you make money is understanding, hey, there's a power trend. I could maybe jump in long, but when this thing ends, one of the most reliable things in trading, when this thing ends, you're going to get a decent, not forever, you're going to get a decent pullback. Why? Because two people have been slamming it out. They're sick of it. They drove the price up to here. Finally, one of them gets all their shares, or they both get all their shares. The one quits buying, and the other one says, hey, thank you. Finally, I can let this price come down a bit. Let all these peons around me try and buy it without me buying. It's not going to matter. So you can make money from knowing the pattern. It doesn't matter at all what's underneath it. So many people spend their time learning garbage that just doesn't matter. I don't care why it is. I told you that just for fun, but the point is you don't have to know. It reminds me back when HFTs came out. This is like 15 years ago. When HFTs came out, they were all the rage. And just like right now, things are all the rage. AI and all this other garbage is not going to change a darn thing. None of it's going to change anything. But oh my gosh, how do we trade? What do we do? HFTs came out 15 years ago or so. And what would happen is there'd be a stock consolidating near the high, blah, 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 and it would just do this. Bam, bam. Right? It would just do that. It would come right back. And it would happen frequently. It would start doing a lot, right? So here's what the F trader does. and I got an email from a guy who did exactly this. Hey, Paul, I got in this breakout. I got in this breakout, and I was sitting there during lunch. I probably shouldn't have been. And all of a sudden, I got shaken out. I got out. I took a bigger loss than I should have. I was really mad. I walked away, and then when I came back, the stock was higher. What should I do? That's the F person, right? The C person at least says, well, I'm not getting in this, until this happens, and then I'll get in over here. And the A trader says, you know what? I'm just getting in with this. I'm just going to play with the big money, right? I did that for 2 months before I even knew what was causing it. Oh, HFTs, what are those? Oh, okay. Well, whatever. Who cares? Do you understand what I'm saying, everybody? This is what I mean about developing as a trader, about becoming your own trader, about learning how to read charts, and it's timeless. It just doesn't matter. All the other things. How would that have helped me make money for somebody to say, oh, Paul, that's an HFT that caused it? I don't care. I don't care if Martha Stewart decided to sell all her shares when she was in prison. It doesn't matter. On this chart, Jim, I just said it was, I said it was an HFT because, here's my number one point, Jim, is I don't know and I don't care. Because day after day, I saw this, and you still see it sometimes. I saw this, bam, bam, right? What happens is the HFTs were enabled sometimes to run stops. So there'd be a nationally recognized area here, everybody had their stop, and they'd force it below that, and all the dumb traders would all hit their stops and sell. And then once they're done selling, there is no selling. Nobody wants to sell it. It's just stops that got hit. So it's just a little game that was played. But who knows? Who cares? Right? If the same thing happens every day, that's what cracked me up about that email, right? Paul, this happens to me every day. What should I do? Well, it's like that Groundhog's Day movie. Is that what it was? If the same thing happens to you every day, how can you tell me you don't know how to make money from it? Just get out of the box, stop doing what you've been trained to do, and start doing what makes money. So that's the point of these. Power trend ends. One way to trade it is yes. I think here's the, can you short an uptrend? Well, you can do a lot of things that the typical technical analysis 101 manual is not going to tell you. Just as an example, to give you some of the detail that you can kind of learn if you want to. In the seminar program, we were discussing about multiple time frames and stuff, and I had a blurb on the slide talking about what you need to see from the time frame 2 higher, and it said if you're going long, you can go blah 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 blah, but not if that time frame is in a downtrend. But then I added the words, and this is on like the seminar slides, but then I added the words, but this may vary with the trader's experience and something else, whatever it was. And it kind of opened the door for me to have to explain that more. So we had a meeting with some of our people called the PARD. I recorded it, put it on the seminar program, but there's a 1-hour discussion about what exactly it is that you could do with a higher time frame that's in conflict with what you're doing. So there's a lot of stuff that goes beyond the one-on-one stuff that you hear. 2 power trends this week. Here's another one. This is PFE from July 1st. And same thing. Boom, boom, boom. When that ends, and you don't have to be a rocket scientist to come up with any fancy formula for when it ends. When it ends, it's just obvious. It's like a right-hand turn, right? Eric, I think we skipped. I didn't realize that there's one coming up next week. Yeah, it's next week or the week after. I have to schedule it there, but yeah, it's coming up real soon. I think it's the holidays. I rescheduled something got messed up. I don't know, but it has been a little longer than it should have been. You're right. My bad. So there's that. Wait a minute. Let me check my notes real quick. Do I have anything else to say about this? Any questions? And I have to save time for that last slide a little bit too. Also, I'm going to move on to number 3. Is there a way to scan for power trends? I don't rely on scans a lot, Jim, but the way you would scan for any type pattern is to use in between Bollinger Bands with the right settings. And then naturally, when you do that, you have to keep changing. If you don't find any, you got to open the parameters. If you find too many, you close the parameters. But that's the best way. Yes, Norman. One of my favorite things has become going along a power trend. The problem is, as Jim just said, a lot of times by the time I see it, you almost got to be saying it's going to end, So there's this fine line between, oh yeah, that's a power trend, and how much longer is it going to go on? This is an exceptional one, but like this other one here, if I can see it in here somewhere, I like it, and I've done some of these, but I'd like to do more of these. So yeah, And the problem is I can tell you right now the whole entry criteria for power trends. You ready for this? Entry criteria for power trend. Jump in somehow. There is no concept. It's just you got to find just the littlest pullback and jump in and then give you room on some stop and then hope you got the right one. But the other part of it, like I said, is when these end, they end. They end. It's done. Yeah, power trends are great. Yeah. Let's move on to number 3, which is big bars. What does a big green bar mean technically? What does a big green bar mean? Big money? Yeah, possibly. Right. Could be either way. It could be the right term I like to use is more potential buyers or more potential buying power to be more specific. If it's a player with a lot of money, more potential buying power than selling power. But the other way it could happen too is if you have less potential selling power, then you have buying power. In other words, to use incorrect but commonly used words, you could move higher like that because you have way more buyers than sellers, or you have less sellers than buyers, meaning sometimes the bears are just taking a nap and saying, hey, that's fine. We don't want to sell that low. This is great. It may or may not be exhaustion, Norman. It may or may not be. That's part of the point of these slides right here coming up. So we have a big green bar, and what do you do with big green bars? Is there any technical relevance to them? So it may be big money. It may be a lack of sellers. It may be some other things too. Wait for buy setups on pullbacks. Okay, you buy. Well, see, this is where things get a little dicey. Depends on where it is in the move. Carlo has a much better answer so far. Depends on where it is in the move. If it is to work, it couldn't be exhaustion, but if it's the beginning of a move, okay, good. But even in addition to that, and Carlo's right, some big bars would be time to get out, not get in. But even on something like, you might call that an igniting bar, right, Carlo? But there's another level above that too, where you have to understand where that is very susceptible to not working. Now that's probably not the best example I could have found, but it kind of does the point for me. Why is that susceptible to not working? As a matter of fact, you'll see it doesn't work. Any attempt to go along that green bar or after the big green bar fails. It did gap the next day, but what is the problem? What do some big green bars represent? Remember, there's 4 people you always have to look at. Who wants to buy? Who wants to sell? Who has to buy, Dale? Who has to sell, right? That bar could form without a single person who wanted to buy that stock. How would that happen? Yeah. The bears decided it's not going lower, and you get this little snowball effect, right? Once you start to move up, short covering. It's just called short covering. Now, short covering is real buying, but it's just that these are not people who want to go long. These are people who are taking profits on their shorts. It's kind of it's just a free move up. So there's no proof at all sometimes. Do you follow what I'm saying, everybody? The initial reaction to a green bar, and again, this is chart lessons, just pointing out some neat little things, that the initial reaction for most people on a green bar is, oh, very bullish, go long. And then the next level is, well, yeah, okay, you know what? Yeah, you're right. If it's like after 29 green bars, maybe that's not the best time to go long. But now, even if it's what you might call an igniting bar, understand there cannot be a single person interested in going long this. You understand the difference in what I said. Nobody interested in going long. Short covering is not interested in going long. They're closing their positions. So there could be zero interest in this long, but yet you get a big green bar coming out of it. Here's another example. Any more comments on this one here? And the next question somebody's going to ask is, how do you tell the difference? Well, that gets into a very detailed analysis of the whole chart, but what you want to see is avenues proof before that shorts have had opportunity to cover, that they have covered. When you have a situation where it's all just kind of one direction and you get your first bounce, that first bounce is often nothing, even if it's a big green bar like that. Another big green bar, and this one may look even more powerful in a sense, because this actually is coming off of a higher low and trades above this high. As a matter of fact, you may say that it looks like it's almost getting into an uptrend with that big green bar. So what are the thoughts on this big green bar? Let's see if we can get the right answer here. To the left is clear. All signs go on this big green bar. Anything else you want to know? All buy, 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 buy. Going higher. Whole number. Yeah. You take all the whole number concepts and a $5 bill, and you could buy most of a cup of coffee at Starbucks. Whole numbers don't mean anything. Space, end to move, wait for a buy setup. Okay. Well, this is, again, a big part of the point I'm trying to make tonight is this one here. We do have one more day up, and then total collapse. But nobody said the key words. What was it that should have been said? There's a question you'd want to know. And to me, it's the most important question in trading. I don't know what liquidated means, other than when you put a frog in a blender, it gets liquidated. But no margin calls necessarily. No margin calls up here. Anybody went long here, this thing free fell before anybody even went to zero. There's no margin call issue. There could be eventually down here somewhere, but this isn't the margin call thing. What's the question nobody asked? You heard me talk before. I consider it perhaps the most important thing. As a matter of fact, my definition of trading, my main definition of trading, would involve understanding this. My definition of trading is understanding the battle between the bulls and the bears across the 4 pertinent time frames that matter for any trade that you're looking at. What's the problem on this one? Nobody asked to see any higher time frame. You can't make any decision about any trade on one chart, right? Nothing. There's maybe a half of an exception to that, but out of the million, right, everybody? You cannot make any decision looking on one time frame, not properly. I mean, certainly you can get lucky. What's the problem on this one? That's the monthly chart. See this pop? See this big green bar right here? See it right there? There it is. Does that put things in perspective for you? I would never, ever go long this chart more than like a day trade. I mean, never. This is what I call the 0 to 50 concept. This stock will never return to any kind of a meaningful number. I don't mean unlikely. I mean never. This never goes back to old highs. It can have little bounces along the way, but they're very, very unreliable. So I don't know how you could take that trade or even consider it without stepping back and saying, well, okay, what did that pop mean on the bigger time frame? This is that chart. This is TDOC, by the way. These charts always amaze me. Can you imagine there's somebody that bought TDOC at $300? And that wasn't that long ago. It was 4 years ago, right? I always like to joke that the person that bought it at 300 is probably the person that just sold it at $7.95 right there. Usually the same person. But like all technical, just got this email from Seeking Alpha like 30 minutes ago. TDOC Health, a beaten down bargain with a second look. Seriously. Worth a second look. I imagine it'll be worth. I imagine it'll be worth a third look also and a fourth look. You know, guys, look, these are not the things to be doing. Okay, you can once in a while, get a good move out of these, but they're literally like a 1 in 10, a 1 in 20 shot. What I've told people is that if you like this crap like this, which you shouldn't even be looking at, what you should do is find 10 that you like. Wait till they get down to $1, not $10, and buy share size such that if it went to 0, you wouldn't care. And buy 10 and hold them for a year. And you're going to have 8 that are total wipeouts. You have 1 that might make a little money and 1 be a bit of a home run. Because, even if this thing went to, if you're an $8 stock, I guess if you got to 50, you'd call that a major home run, right? And that's still a very small bounce on this chart overall, right? I don't even know what a Kathy Woods is. Big bars can be a big deal, but, and I'm getting to my big summary comments here. Are there any questions so far? I left a lot of time at the end on this one for talk or debate or whatever. Big bars can be a big deal, but like all of technical analysis, there's no magic cookie cutter one thing that works in a vacuum. The whole chart must be understood. And that was, I'm going to go into some more on the next slide, but that was kind of the point of it. These are chart lessons. These are one little snippet things. I'm just showing you examples of how things work. None of this, though, puts things together. This is just the need you have to look at the total picture of how to read a chart is what matters. There's no one thing that works. That's what everybody wants, is the one thing that works. Big bar never fails. Well, not true. Moving averages doing X, Y, Z, is the way. No, never make money doing that. Some magical technical indicator. No, never going to make money doing that. So it's just understanding a chart and how it works, which is not hard to figure out, but you have to get kind of beyond this point of just looking for these little one-hit wonder things. Okay? Are there any questions? I have a couple slides here. Awesome, Paul Ring. Great, great, Jag. Well, here's a big thing from me, and don't take this the wrong way. I mean, I think most of you know me, you know I have a seminar program. You want to sign up for it, that's great. If you don't, you don't, I don't care. But what I truly care about is I sometimes feel that I do a disservice to people by having events like this and by putting out Trade of the Week videos. How could I do a disservice to people? And that's why I keep trying. And when I remind you about this to clear my own conscience, some people may think I have the wrong motives, like, oh, I want you to sign up for a seminar program. Well, if you want to, fine. If you don't, don't. But I want you to walk away understanding something, right? And that is this. Hey, Paul, great info. What if I memorized all the information on all the events you've ever done? Would I basically have all of the info I need to trade? The answer to that, and I've told you 1,000 times, the answer to that is no. What percentage of the DTS seminar program would I know? 3%. That's the number I just made up when I did these slides. After careful research, 3%. I want you to understand, and you know, two sides. Is number one, from my point of view, I get worried because I get people sometimes saying, wow, what a great presentation. And then I get an email from them a week later and they did some trade and they said, Paul, you know, I did a trade like the one you showed me in that presentation, but it didn't work. What's wrong? And what percentage correct was the trade that they did based on what I showed in the seminar or in the presentation? Take a guess. What percent? Yeah. I mean, you know, 10%. You know, and notice, no, it would never be zero, Eric. That's the whole point. It's never zero. Because they latched on to some little detail I was bringing up to make a point. And to them, well, that's what trading is. You know, oh, a big bar or whatever it is, you know, and that's what they latch on to. And I feel sometimes I do a disservice by doing that because people have this false sense. I just want to really, you know, overemphasize that all the stuff that I do in here is for a couple of purposes. Number one, it is supplemental material for people who take the seminar program. And number two, it is just what tonight is. It's showing great little things about technical analysis, but nowhere in here am I teaching the big picture. I mean, nowhere am I putting all this together. In other words, a great example is somebody will walk away from this, and I'm going to get an email saying, oh, Paul, some chart made a lower low, and I went long, and I got killed. Why didn't that work? In other words, did not teach you a strategy. I taught you no strategy. What it says here, I did not teach you a thing tonight that will make you money per se. Now, if you know how to trade, maybe I taught you some things that will help save you money. Like Jag said, help with this, help with that. That's great. But I didn't teach a strategy. I didn't teach a way to trade. You know, buying a lower low is not a way to trade. But if you understand a chart and if you have a setup and everything is perfect about this chart, I would prefer to have to make a lower low, which is 100% contrary to what most people would tell you in trading because they don't understand how it works. So that's the big point I wanted to make, really. Anybody have any questions about anything you want to talk about at all? Thanks, Scott, I think. But that's maybe a good thing because like Debbie just set up their PL over trading. Was there a question in there, Debbie, or is that just kind of a thanks? Or? Oh, absolutely, Tag. And your seminar. So I mean, if you go review it, this is two strategies that lie outside of the price cycle. They talk about it in great detail. There's 2 or 3 things that you just want to make sure about that to do that, really. Yeah, but because this is never a strategy. There's never a one-bar strategy. There's no such thing. I don't care what it does. There's never a one-bar strategy on that time frame, right? Yeah, for that monthly one, yes, absolutely, positively. Absolutely, positively. If I saw this and I said, what do things look like? If I see this, you seen me, Tag, in the room. If I see this, I'm not even for a day trade for me. And I don't doubt you get short covering pops, you get stuff you can make day trade money with, but I won't even put it on the screen for a day trade. It's just there's better stuff to do than that mess, right? There is a 2-bar strategy, has a huge asterisk next to it though, and then after that. There is a 3, but even then, while I call them that, they're there's still some asterisks by them. Like I wouldn't want to send you out in the world and say, here's 2 bars, here's 3 bars, that's all you need. There's still a great deal of gradient shading and variances that can make one better than the other. So I think you just got to say that for anything you ever do, you have to understand how to read a chart across the 4 time frames that matter all the time. Now, there's some basic stuff that you see, you go, wow, that's interesting. Like anytime I see a big green bar on a chart that's not that monthly chart, I'm going to take a look at it because that could be the start of something, right? There's lots of things that'll catch my eye on a chart because, hey, I want to look at that. But none of it is ever a strategy. And none of it even means I'd save the chart, right? I told you I look at 1,000 charts a night and I save 20, 25, 30 of them tops. And of those, I probably take out 5 when I put them on my main screen. And the next day when I look at them, half of them I probably don't even look at again. So there's maybe 10 things I look at out of 1,000. And then maybe none of those even becomes a trade. And I'm not trying to say this is long process or complicated. I'm not just trying to say anything. You can have a lot of different styles. You can look at 100 charts if you want to. That's fine. But filtering down and just seeing a thing doesn't make it a trade. And when you do know what you're looking for, in case you logged in late, I started with this. This is a partial slide from the seminar program and a concluding slide to day 1. Just mention, and because it all relates, to have the ability to know and understand, to wait for certain things. Well, part of it is knowing what to look for and what to wait for. Number 2 is even when you know what to wait for, a lot of people don't have the patience. They just see something and, it's the word that, that goes to this is FOMO. And that's not a trading acronym. If you don't know what it is, you're going to have to ask because I think everybody knows what that is. But this is so important in trading. And FOMO is the opposite of patience. And for traders, it's a huge deal. And you always have to ask yourself, number 1, you have to be able to, here'll be my final comment for tonight, at least for me, unless you have questions. When you get, I'm not saying there's times where there's a really good looking trade, and I do fear missing it. You should fear missing a great trade because the people that just say, oh, wait for a perfect setup, well, that's not always the right attitude. Or there's a saying out there, missed money is better than lost money. I don't really agree with that necessarily. If you have the right setup, the right chart, you can make 3 or 4 times what you lose on a trade. It's not okay to pass it. It's not okay to say that that's it. Like the earlier trade I showed you, that was an 11-hour trade. To pass that is not acceptable if it does what you want. But the question I always ask myself is, what if I take this trade and it stops out? Look at it objectively. How much of an idiot are you for taking it? What if you don't take the trade and it's a home run? How much an idiot are you for taking it? But to answer that question, you have to know the charts well enough to be able to give an intelligent answer to your own question, right? You can't just look at any chart and not know what you're doing and just say, because then you're always going to say, oh, I don't want to miss it, because most traders are focused on missing something, impatience, everything's going to be a home run. The truth of it is, very few stock charts have big moves. Most of them are meandering, and that's why there's a whole presentation about make your money from ordinary moves. I don't go out looking for the home run stuff. I go out looking for something that's just going to have a normal daily move and you catch it in the right spot. All right, I haven't read the screen in a while. Let me go back. Norman, Paul, what I have problems with is small charts like a 2-minute. I know many concepts and I know that stops exist for a reason, but the 2-minute charts give me refinement. But it's hard for me to get out of them and move to a 5-minute, even though the bias gives me 15-minute or an hour. Do you think AI will help to streamline looking through thousands of charts and patterns to analyze specifics we want to drill down to? So, number 1, your question borders on how do I trade? Oh, that's 2 different, I'm sorry, that's 2 different people. I'm sorry, I thought it was all one question. Norman, your question borders on how do I trade, which is fine. But if I read you right, you kind of have it backwards. You don't start on a 2-minute chart and then hope that the bigger time frames justify what you're doing. You do it the other way around. And it's also a way to kind of narrow your refinement. You look for things that are making sense. If you're day trading, look for things that are making sense on a 60 or 50-minute chart. And then you can come down and find your entries on a 1-minute, 2-minute. It's kind of what I do, if that was helpful to your answer. And then Anatoly, hi. Do you think AI will help streamline looking through thousands? AI to a very, very small point. I don't use any kind of scan in Oddly. I have them set up. I've used them. I'm lying a little bit. Occasionally I cheat and I pull one out and use them for a little bit. Here's all big difference in Oddly. Here's what a scan can do for you. I don't care if you want to call it AI or just a program you wrote for it or just programming a scanner. Doesn't matter what you call it. Here's what it can do. I'm going to write on the screen here. You can have 1,000 symbols in your universe or your watch list, and you could say, all right, I don't want to look at all these. Here's what I want to do. Mr. AI, would you please find all of the charts in here that are uptrending on both a daily and an hourly chart? And then you have to define what uptrending is, right? So here you find, it goes through and finds some daily charts, and then it finds the hourly trend. So it gives back to you 80 charts that it is determined based on your parameters are uptrending on daily and hourly. Now the question is, what do you do with those 80 charts? Right, that's the big thing. Nothing will take the place of you finding the charts. AI will not make you money, period. It's already been proven. If you don't believe me, go try it. Because it can't. It's for the same reason program trading can't for everything else. So scanning, however you want to call it, can be helpful to take a big group of stocks and narrow it down to a smaller refinement if you have a very specific thing you're looking for. Just like if you're looking for some kind of consolidations, right? You can run some kind of scan and it'll turn back, different varieties of consolidations. The problem with the scan is though, if you get just a little too narrow in your parameters, you miss the best trade of the century. And you get too wide on your parameters, and then you're not doing the job of limiting your stuff because you still have 800 stocks to look at. But scanners can do that. That's great. My problem is I look for such a variety of abnormalities of weird things on charts that it wouldn't be helpful for me to scan because I'd have to run a bunch of different scans because I look for a variety. I love pattern failures. I love big bars. I love trends that have failed. In other words, by the time I get done running 7 scans, it would take me long. It wouldn't be helpful, in other words. So I just like going through the charts myself. I do it very quickly. I do it in, I do 1,000 charts in about 12, 15 minutes. So it's not a big time thing. And again, you don't have to do that. I think if you start with 100 charts and go through, that's great. But I'm a big believer in using stocks as your main trading vehicle. Now, I like doing futures once in a while when the market sets up perfectly. A lot of my students do Forex and futures, that's fine. But the great thing with stocks is, here's 100 charts to look at. I mean, just by the simple laws of probability, everybody, isn't it absolutely true that if you go through and pick out what you feel to be the best 10 out of 100 charts, it's more likely going to be success than if you just pick one random chart out of the 100. Isn't that true? Person A has to blindly select one chart out of 100. Here you go. There's your chart. You didn't even see it, right? Person B looks at all 100 and picks the best 10, right? Who's going to have a better trading result? There's no question. Anything in life. When you can start with a broader audience and narrow it down, you're going to end up with better results. That's all there is to it. How you want to do that's up to you, but you have to make the AI or a scan will never find a trade for you. Not that's going to make you money. Okay? Norman, my question is, when will I be able to get in 5 minutes, and when will it go down to 2 minutes? Because for me, everything is 2 minutes, but in 5 minutes it feels like it's going away if I don't get into 2 minutes in patience, as you say. Well, that, Norman, I have to probably just draw a line and say that becomes, in a sense, the essence of trading and entries, and it's not something that I could answer for you in 2 minutes if I wanted to. I'm not trying to be a jerk, but the answer involves just knowing everything. It just really does. Knowing everything I could teach about technical analysis, because you can't do what you're saying unless you understand everything. And to do any other kind of shortcut would be a disservice to you. I get what you're saying, and it just involves really knowing the chart well enough to know when you can come down that far. Just so you understand, you're on the right track, Norman, in that my long-term positions off of a weekly and monthly chart, I often enter on a 60-minute chart. My day trades, even though I may be structured on a 15-minute chart, I'm almost always using a 1 minute to get in or get out. So you're on the right path, but it's not as simple as just saying, here's where you flip the switch, you know what I mean? Anyway, I'm sure we'll see each other inside DTS. Okay. Thanks, Norman. And did I answer your question okay, Anatoly? And Anatoly. It's Anatoly, right? Anatoli, second to last syllable accented in most Latin languages, correct? Anatoli. I'm a drunk uncle? Did he just call me a drunk uncle in Spanish? I'm a drunk uncle? I'm a drunk uncle. All right. That's what you say. I'll have to look at what maquina is. I'm not sure. Yeah, you call me una maquina tío. I thought that was I have no idea. All right. Good with the scanning question? Everyone else? Any other questions anywhere? You're good. You're good. I got that question. Anatoly, I assume you're good. All right. All right. Oh, here's the calendar coming up. So here we are right here today. Next week is the only event going on is a Platinum member meeting for Platinum DTS people. The week after that, we have scanning, so I'll see all of you guys for scanning. And then these are seminar program events, the scanning for day trades and the practical application review day. And then the end of the month, we have our intro course, the summary version of the intro course, and then the summary version of the seminar program all on one day on Saturday. If you're in the room, I'll see you in the morning. Have a great night, everybody.